Good evening, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. Today was the budget special trading session, and honestly, the market was brutal. Fast moves, fake breakouts, sudden reversals. This was not an easy day to trade at all. But the good part is we were prepared. We knew it's not going to be easy. We stuck to our plan and we managed to capture some really clean trades from it. In this video, I'll quickly walk you through how today's price action unfolded, what exactly worked from our levels, and what you should focus on going forward after such a volatile budget session. This is exactly why I always say we don't predict the market, we prepare for it. So if you trade Nifty seriously, like the video, subscribe to the channel, and watch till the very end because the learning from a brutal session like today is far more valuable than an easy trading day, right? Let's start with today's chart. Uh, Markets opened inside the range which was there, and of course, there was no reason for markets to react at the very start. The budgets start at around 11 a.m. and market slowly and steadily gave us a closing above the uh, triangle consolidation area as well. Gave us a not a good pullback, I would say, but a good sideways consolidation, post which at around 11, just after the budget had started. Uh, Markets gave a breakout of above the high of this particular swing which was there. This is where I entered into the first trade of the day on the call side, and I was immediately stopped out. I took a stop loss of around 11 points in this particular trade. Markets gave a move on the upside, immediately reversed back. In 10 minutes, I was in and out of the trade. Now, there are two things to try and observe from this particular failed trade. Number one, the markets tried to move up as soon as the budget speech started, could not. Out here formed a good double top, but do we take a short entry out here? Absolutely not. We are still above the trend line which was there, and this could very well have been just a simple retest, and then we could have continued. So these are all the possibilities. So that is why we should not be uh, doing anything simply because we see a double top at a random place. Absolutely not. We should wait for the markets to confirm. And after this particular breakdown of the double top, markets slowly and steadily went back below the bottom trend line, gave a very good and deep pullback. Now, the size of this pullback, if you see itself, is 113 odd points, 120 odd points uh, on the pullback candle. And after this pullback, once this low was taken out, this was the trigger to go short. Now, the stop loss was extremely big because of the deep pullback that we had gotten out here. What could also have been a trap on the downside, because my prices had briefly up in the pullback, had again managed to close back above the uh, upper trend line. Now, the thing to do here is, like I said, you need to be watching the budget speech very carefully and listening to it. This breakdown came with the announcement of increase in the securities transaction tax. uh, if you would have been following the Twitter space or the online forums about the expectations from the budget, the trader community as a whole or the stock market as a whole was kind of anticipating that there would be some relief either in terms of STT or some relief in terms of LTCG and STCG. But none of those were actually announced, but simply the STT on the futures as well as option tradings uh, were increased. And the increase is quite significant, to be honest. In terms of the percentage increase, it is not at all favorable for traders, and that was exactly shown in the way markets reacted to it. Now, stock market is said to be the price is said to discount everything, but then these are some things which are kind of coming in the live market, and these are the market see these things as shocks and would react accordingly. So, in case of any cut in STCG or LTCG, STCG or STT or of any benefit that would have been passed on to the traders, the markets would have reacted positively. But then looking at the announcement of increase in STT, I was actually kind of surprised when the announcement was done. The markets are actually not doing good, and a lot of expectation was pinned on the budget that maybe there will be certain announcements that would also lure back FIIs, which have been constantly selling in the Indian market. And because none of that was there, and the markets did not absolutely not react very, very well to it, immediately went into a good sell-off. Of course, I entered with lower quantities than I would on a regular trading day, which I had clearly mentioned because the volatility is going to be, like I had clearly mentioned, volatility is going to be huge. Sorry for the pause. I got a call on the phone and I got cut off from the video. Uh, So yeah, where were we? We were discussing this particular trade, which were in with the announcement of increase in STT markets nose dived. This is where I had entered below this particular swing. Uh, Stop loss, of course, was bigger, but then the idea was not to stick to the original stop loss in case if it would have been starting to reverse and enter back into the trend line, I would have cut the trade short. But then the markets did not give any chance for that, and market simply tumbled and I exited at this particular candle. Now, the reason, again, of course, looking at the buying which is coming in from the bottom, it might look small, but if you kind of see, this is a 1+% move, 260 odd points buying, which is coming in from the bottom. And like I said, whenever you get a profit which is exceptionally higher than what you were expecting or what you usually get. So in this particular trade, I captured around 330 odd points. At the peak, the points which were showing up on the screen was 550 plus points. Absolutely crazy trade. Uh, but then again, you have to be following the rules, and this is at the close of this particular candle, which looked like a good hammer candle. This is where I exited the trade with 330 odd points in the kitty. And had I not done that, again, of course, I would not have been in big loss because the buffer was quite a lot. But then a lot of the profit got away, which was showing on screen. The unrealized profit got away in this particular move, and more would have been gone in around these moves, right? So, what I had clearly mentioned was on days like these, you need to be very quick with your entries as well as very quick with your exits. Post this particular thing again, there was a double bottom kind of thing out here if you observe. Markets gave a good one-way move, gave a good pullback, another small, and then again kind of, but then again, it is very important to see where we are coming from. And if you simply switch to the 15 minutes time frame, and if you would have used Fibonacci, uh, we were around these levels itself, right? Around the point 0.5 to 0.618 zone. And we needed to give a closing above this. If we would have gotten the pullback, we could have, of course, got a trade on the long side. But then, since we were already at a resistance zone, the fall which came in from the day's high till day's low, and this was simply but nothing but a pullback, and that was the reason no participation in the trades on the long side for us yet. We need to keep on understanding where the market is coming from, what the market is trying to do. Is it a reversal? Is it a pullback? Had we got this particular double bottom somewhere around here, we could have taken a trade on the long side for pullbacks up to the point 0.5 to 0.618 zone, but this came in at around those levels itself. Plus, uh, not suggested to take a long trade after such a negative way in which the markets had reacted. Of course, we got another trade on the short side at around 245, which following and sticking to my rules, I did not enter. But then if anybody would have again entered into shorts around the day's end, would have also again got a good profits. Now, going ahead, I hope the budget session was uh, clear. How did we trade? What did we trade? And the preparation which actually helped us in capturing such big points, right? Now, the important question is how do we plan or move ahead from here is uh, number one, we start with again the weekly candle, the weekly candle, which has completely changed. And of course, we need to revise the weekly fib level that has been on our chart since yesterday. That being done, on the daily time frame, we have a very negative candle. We have got a close below the sideways range in which we were trading, and what looked like a good double bottom or a base formation after this particular fall is nothing but simply a sideways consolidation and the event trigger which happened, and we have got a direction as of now. There was also a good trend line which I had earlier spotted, but I spotted this in today's market, wherein if you simply connect these lows, uh, we have got a closing below that as well. Markets are kind of not at all looking in the best shape. It is time for us to trade cautiously. Number one, FIIs, I believe, would not be actively trading today, keeping in mind it's a holiday for them. So maybe we get to see the real reaction of the budget tomorrow. But the thing to consider out here is this is a very big range candle today that we are seeing is a 3.5% candle, 870 odd points from the high till the low. And what usually happens after a big broad ranged uh, candle day is we again might see a couple of inside days, not just one, but prices moving inside this range for some time. So whatever it is, we will be keeping an eye out on how the trades are shaping up. But then my honest suggestion to anybody who is trading tomorrow, they have to let the market settle in for a couple of days. Do not be too active or aggressive with your trades. Let the market have some breather. And of course, this is a big, absolute big range. So, yeah. Number one thing, what we will be doing is we'll keep the plan of action very simple. Let's mark today's low is again quite far away from where we have closed, but then yes, I would like to keep my trading plan very simple. And I believe it is time to extend the gap area as well. This time, I believe we will be filling in this particular gap. It's time to extend it. This has been marked on our charts ever since May. We did come close to it, did a good bounce back from it, created a new all-time high as well. And right now we are again approaching these levels. So maybe we fill in this gap this time and then continue, or we are like to go down ahead. We are nobody to predict. We will simply be participating in whatever the price action is throwing at us. So for tomorrow, the plan of action should be very simple. And above this high, we can participate in a long trade, keeping it into mind that this low is not getting breached. So this is will be a good double bottom with a good enough pullback in the second leg itself also. So out here, the pullback which was there, it was not actually a pullback, it was small red candle. And we have to consider the relative size of the candles to consider whether the pullback is a valid pullback or not. So only long trades to be taken only out here, around here. Uh, Again, time to be very cautious on the trades on the long side. And we are also simply taking it because although we are trading below a weekly fib resistance, but then uh, there's a lot of space for the markets to move up. So you can, of course, scalp a trade on the long side. Out here, we will be taking any short trades in case of a setup. Needless to say, this is not for tomorrow, of course, but above this, we can plan for a long trade as well. So let's see how the markets are reacting once they open. tomorrow. So yeah, that's it for today's budget special session review. The market was brutal, but once again, it clearly proved one simple thing: discipline beats emotions, especially on volatile days. If today's video helped you understand how to stay aligned with your plan during fast and unpredictable moves, please like the video and subscribe to Your Nifty Guy. And as always, remember this before you close your chart today. You don't need to win every trade, you only need to follow your process every day. See you in the next plan video. Till then, trade safe, trade discipline, and cheers and thanks for tuning in, guys.